Alright guys, welcome back to the channel, and we've got another day in the books. So quick recap here for the Tuesday, February 21st session, and hopefully y'all checked out the video that I uploaded this morning. Hopefully that kept you on the right side of things. So a bit of a bloody nose here today for the market. You got your S&Ps down 2%, you've got QQQ down about 2.5%, Apple down 2.6%, Amazon down 2.7%. A good old-fashioned walk down Tuesday, and the downside target that I gave you guys in this morning's video was 4,000/3980. Right, we're pretty much here looking for a flush down towards that daily 50, and generally speaking, we got that flush. So now the question, my friends, where do we go from here? Do we just continue to roll over and the bull rally is dead, or do the bulls got a little bit of fight left in them? And they try to clean things up from here. Here's the thing. It's not a big deal to pull back to a daily 21 EMA. Right, a lot of times it's a buying opportunity. It's also not a big deal to pull back to a daily 50, especially when the big 3 indicator is bullish. Right, a lot of times that's also going to be a potential buying opportunity. The key right now, guys, is the damage on the lower time frames. So if you anchor to something like, say, an hourly chart, and you just watch your hourly trend, well, in an hourly uptrend, it's totally cool to pull back to a 21 EMA. Right? It's suitable to pull back to a 50 SMA. And real quick here, guys, the 21 EMA is the white moving average, the 50 SMA is the orange moving average, and the big red fella is your 200 SMA. So like I was saying, in an hourly uptrend, not a big deal to pull back to a 21, not a big deal to pull back to the 50. Not even the end of the world or the end of the trend if you pull back to the 200 SMA. So ever since things turned bullish back here in mid-January, you can kind of see a few of those pullbacks. We pulled back to the 200, we pulled back to the 21, we pulled back to the 50, but all the while you continue to grind higher. Right? That's all suitable. What isn't suitable is a complete blowout of structure like you're seeing over here. Hourly squeeze fires short. The indicator goes from bullish to bearish. You take out your 21 EMA, you take out the 50 SMA, and now you're taking out the 200 SMA. So the point of being on this pullback to the daily 50, which again can be a potential buy zone, we've taken some pretty good damage here on our lower time frames. And essentially, from an hourly chart down to a 5-minute, the bulls are basically starting from scratch. If they pull it back to a 21 and they stabilize it and hold support, they've still got a lot to work with. They got some trend, they got some momentum, they got some tricks up their sleeves. But when you take out your moving averages, when the indicator goes bearish, you're basically seeing the bulls having to start from scratch. Where now they got to cancel out the sell signal, they got to take our indicator from bearish to neutral, then they got to go from neutral to bullish. So there's the problems on the 1 hour chart. You're taking out all the moving averages. Your 30-minute chart totally bombed out. So the 30-minute uptrend is dead, and the 15-minute chart, you're in complete walk down mode. So I say all this to say, pretty big flush here today. We did come down to that key level of 4,000. Now we could gap down, and if we do gap down hard enough, rest in peace to the bulls. But my expectation, we're probably going to get a decent bounce here. Now, like I was saying, a lot of times a pullback to a daily 50, especially when the indicator is bullish, usually going to be a decent buying opportunity. But the key here the next few days, guys, if we do bounce, is during the course of that bounce that we fix the problems on our lower time frames. And what I would anchor to here would be the hourly chart. Where, in other words, if we bounce tomorrow, we bounce on Thursday or Friday, but they don't fix the problems in the structure here, I don't think that bounce does us too much good. At some point, it probably fails. We probably roll right back over. So the exact levels are subject to change. But what I would anchor to is your hourly chart. And we're looking at about 40.50. Right, that's your next key over-under level. If tomorrow, if into Friday, they can trigger a short squeeze, and being that the bulls are basically starting from scratch, that's where we are. They got to trigger the short squeeze, but if they do, if we can actually get back above 40.50, right? They take it back above the hourly 200. They take it back above the hourly 21. If they can quickly start fixing some of the problems here, well then that bounce could turn into the resumption of the uptrend, where a week or so down the road, you could see the market gunning back towards 4,100, 4,150, maybe upwards of 4,200. But again, if the bounce fails to fix those problems, you continue to play your lower time frame downtrend, right? Trust the indicator. Your hourly chart has a sell signal, so until that changes, it should behave like a downtrend, which means, by definition, we're going to flush away from the 21 EMA, we're going to rally back to it, and then we're going to roll right back over. So that's where tomorrow morning the S&Ps could gap up, 40, 50 bucks. It's not going to fix these problems. So be very careful that a big bounce here over the next few days could just simply be a retracement in an hourly downtrend. So what I'm going to look for tomorrow, Thursday, Friday, and it's got to start from the ground up. I want to see my 5-minute chart go back into a bullish uptrend. So we're looking for buy signals. I got to see the 15-minute chart clean up all the problems, go from bearish to neutral to bullish. They got to make that rotation from bearish to bullish all the way up to your hourly time frame. And again, that starts with a move back above 40.50. And that is that, guys. So to summarize here, big flush today. They took it down towards that big level of 4,000. While I do expect some sort of bounce from here, if that bounce does not fix the problems on your lower time frame structure, expect that bounce to eventually fail, and we should roll right back over. So your key level here for the next few days is 40.50. If they can short squeeze it back above the hourly 200 SMA, things get pretty interesting here. And a couple more charts, guys, before I let you go. Quick look at the dollar. So remember, if we're going to get a rally here in the market, we got to get the dollar coming off its high horse. So best case scenario for the bulls, of course, is we go into the weekend with the dollar back under that daily 21 EMA. So no progress there just yet. And then the junk bonds. If we are going to get a rally in the S&Ps or the Qs, we got to see HYG kind of sober up here and get up off the couch. So no signs of that just yet. Daily chart looks busted. The 1-hour chart is bearish. The 30-minute is bearish, so on and so on. So today's action definitely boded well for our short. We put on the SPX 4100 call credit spread in the mastery on Friday. So that trade is off to a good start here. But again, as far as tomorrow, guys, I initially would expect some sort of bounce off of 4K. But be very careful buying that bounce for anything more than a day trade. Like where I think we entertain the idea of getting swing long the market again would be back above 40.50. So be careful here. You could wake up to a pretty hefty gap up tomorrow. That could just be a reversion to the mean in an hourly downtrend. Be careful there, guys. So as always, I hope you found this helpful. Go on ahead and hit the like and subscribe button. And tomorrow's Wednesday, so tomorrow morning we'll be live here on the channel at 8:45 a.m. Eastern for some pre-market prep. So as always, I'm looking forward to that. Hope to see y'all there, but until then, have a good night, be safe, and I'll talk to you soon. Adios.